So this is exercise 1-5 on page 131. So exercise 1.5 says, this information relates to Benser Company for the year 2022. And then it lists a bunch of information there, okay? And then it says instructions. Prepare an income statement and a retained earnings statement for the year ending December 31, 2022. So they're not asking for a balance sheet. They're just asking for an income statement and retained earnings statement. And remember, we need to do it in specific order. Income statement first, then the retained earnings statement, okay? So we're going to do the income statement first. So the income statement starts at the top of the page with the name of the company. So this is Benser Company. The next line has the name of the actual income or the statement, and this is the income statement, okay? And then the next line is either going to be for the month end or the year end. And because you read the problem, it says they want it for the year ending December 31, 2022. So we're going to have here for the year ended December 31, 2022. Okay. All right. So now for the income statement, the first section that we have is called revenues. Right? Revenues. All right. Revenues is the title of the section. So we're going to look through the problem there and we're going to look for revenues. And if you go down the list there, you're going to see service revenue, $58,000. Now, not all problems have one revenue. Some have two, but most of what you are going to see in the class are going to just have one revenue. Okay, so we have service revenue, and it's $58,000. Okay, and that's all the revenue we have. So now we're going to go down to the next section, which are expenses, because remember the income statement lists revenues and expenses. So we're going to title that section expenses, and then we're going to go through and we're going to look at the expenses and we're going to kind of try and follow the order in the book, but we're not going to get like really hung up on it because remember the order for the expenses doesn't have to be exact. But they generally do salaries and wages expense first. And if we look, we see salaries and wages expense is $30,000. So we're going to put that. We're then going to go to rent expense. And rent expense is $10,400. We are then going to go to utilities expense. And utilities expense is $2,400. And then we're going to go to advertising expense. And advertising expense is $1,800. Again, if you had this in a little different order, that would be fine. You would still get it correct, but remember, if you have to go back and check it, it might be more difficult if you don't have it in the right order. Okay, so now when we're looking at this, the next step is going to be to add up all of our expenses. So we're going to add 30,000, 10,400, 2,400, and 1,800, and that's going to give us total expenses of 44,600. So we have to title that line total expenses. Okay, 44,600. Then what we're going to do is we're going to look at the revenues and the expenses, right? Because we have to figure out, do we have a net income or a net loss? And remember, the problems that you're doing in this class, you're generally always going to have a net income. I'm confident in saying you will always have a net income, right? So we had 58,000 come in revenue and 44,600 go out in expenses. So that means that we had more come in than go out, so we have a net income. So $58,000 minus 44,600 gives us $13,400. So $13,400 is our net income. Okay, so that is our net income, right? And then we're going to go down and we're going to do the retained earnings statement. Okay. When it's a net loss, you would have more going out than coming in. You would have higher expenses and lower revenue. All right, so now we are going to do the retained earnings statement. So again, name of the company, Benser Company. We have the name of the statement, retained earnings statement. The date on this is the same as it is for the income statement for the year ended December 31st, 2022. And we start this with the starting retained earnings, starting for the period. Now remember, this is a year ending statement. So that means the first day of the period is January 1, the first day of the year. Now, companies can have different fiscal years, financial years, different than the calendar, but right now everything's going to be like a calendar. So it's going to be retained earnings, January 1. January 1. And you need to look at your problem. You always need to look at your problem and see if it has any starting retained earnings. If they do not list the retained earnings from the beginning, you assume it was 0. But if you look at this problem, it says retained earnings January 1 was $67,000. So it does have a starting retained earnings. So you're going to put $67,000 for your starting retained earnings. The next step in the process is you add the net income, and you actually do the word add, net income as the title. And then you're going to pull the net income from above. You just did the financial statement, right? So you're going to pull that $13,400 down to your retained earnings statement. So now you've got the retained earnings, $67,000. You're going to add the net income of $13,400. That's going to give you $80,400. That does not have a title to it or anything. It's just kind of like a subtotal number. The next line you're going to do is you're going to type the words less, and it's going to be less dividends. Okay. And in this case, the dividends are $6,000. So you're going to list the dividends of $6,000. So now it says less. So you're going to take the $80,400, you're going to subtract the $6,000, and that's going to give you $74,400. And that number is called your retained earnings for December 31. So the retained earnings at the end of the period. So let me try and just reduce this down just so you can get like a little picture here of both statements together. Let's see if we can fit it all. There we go. Okay. Whoops. All right. So that is an income statement and a retained earnings statement. We haven't done a balance sheet for any companies yet. That's just those two to look at. Okay. So that you can kind of see the process of how that works.